Hello traders, Robert here with another FX market update. So this was our first full trading week following the Thanksgiving holiday, and we have a bit of price action to consider. So going back a couple weeks, we were looking at the dollar index and deciding which direction it was going to go. If we back up to early November, at this point in time, it looked like price action was a bit choppy, a bit overlapping. Perhaps this was just a more medium-term correction before another push up. But now we can look at price action, and to me, it's fairly reasonable to conclude that this is some kind of developing impulse to the downside. I think the market has shown its hand at this point, and the best option, the best possible count here for the dollar index is a developing impulse of some kind to the downside. And a few reasons why I think that is. One, it looks like this wave 3 at the moment is well beyond the expected Fibonacci extension level. The 1.618 extension is kind of the standard benchmark that we look for in a developing wave 3, and as we can see, we've moved well past that. So wave 3 is plenty long enough. We've also broken out of that parallel channel that we were watching a couple weeks ago. Also very indicative of impulsive price action rather than corrective price action. And just looking at the price action itself, the sharpest, steepest moves are contained in this wave 3. For example, right here, this looks like the strongest move down in this bearish impulse. And I wouldn't be surprised if this just so happens to be wave 3 of wave 3. That's exactly where we would anticipate the strongest, most active price action to be. And we can take a quick look at momentum. Our the most extreme momentum signatures also occur in wave 3. We'd like to see that. And now we look like we have a bit of divergence on the way back up now. As we can see, the values on the indicator are going up. They're increasing as price action continues to decrease along that same period of time from about middle of November toward the end of November. So I'm thinking wave 3 is either already complete or will be complete very soon. We should see a bounce into wave 4, something likely shallow but choppy. Might take a little time. If we go by the guideline of alternation, we can take a look at this wave 2 and we see very deep retracement, probably an 80-90% retracement, and it is a flat correction. So for wave 4, I would anticipate something a bit more shallow, maybe around a 38.2, and perhaps we get something like a triangle, something that takes its time and just bounces around, doesn't really go anywhere. But we will have to wait and see. But ultimately, we can move our invalidation level down to here, around 105.50, and anticipate some kind of bounce, some kind of correction again. Perhaps it's a triangle. Perhaps we get a zigzag to alternate with the flat wave 2. We have a few different options to look for, but at the moment, I am watching for some kind of bounce correction soon in the US dollar before the final push down to complete our first medium term impulse to the downside. And as far as the currency pairs, that dollar weakness has manifested itself as expected. The ending diagonal option on Aussie dollar seems to be developing nicely. I think we are in a similar story in toward the tail end of a wave 3 and anticipating a wave 4 bounce before a wave 5 move to the upside. And euro, same thing. Looks like a nice wave 3 price action, so we can continue to track that to the upside. Ultimately, just dollar weakness seemed to be the name of the game last week and will likely continue until this impulse is complete, this more medium term impulsive structure. As far as other currencies to watch, I don't see a whole lot. Perhaps this ending diagonal on Kiwi dollar, Japanese yen can develop. We're very close to the invalidation level where wave 5 would be longer than wave 3, but we're still, this option is still valid at the moment. So we'll keep an eye on that. Perhaps if we get some strong, decisive price action to the downside, an aggressive entry would be here at the break of B of 5. A more conservative entry perhaps down here. Totally up to you. But I'm liking the way this price action is developing, and we still are beneath the invalidation level. And yeah, I don't really like that one too much. I'm not sure if that pattern is even valid. The Euro Aussie triangle that has been looking okay, I think needs a couple more waves to develop. I remember a while ago we were looking at this option, the option that the triangle itself was already complete, C, D, E, and this was my preferred count as well, but now, of course, that we've moved beyond what was the wave C extreme, that count is no longer valid, so we do have to adjust, and perhaps we're still developing down in a wave C, and we'll still need a D and an E, in which case this pair will likely be busy for the next few weeks, if not months. So we should look around, see if we can find something a bit better. I like this impulsive action here in Euro Canadian dollar. If this develops into a nice clear three-wave move of some kind, perhaps a bullish entry here would make the most sense. Possibly looking for one more down if you're okay with this risk to reward. Not quite 2-to-1, which is a minimum for a lot of traders, but I do like this choppy, messy price action. It does count fairly well as a triangle, so that could be a nice short next week as well. Not a whole lot more. And in terms of news events to keep an eye on for next week, not the busiest week. As you probably know, as we wind down into our holiday season, things tend to slow down a bit. And as far as major news events that could shake the markets, keep an eye on your Aussie dollar trades on Monday. There is a bank statement Monday evening for me, Pacific Standard Time. And other than that, maybe US dollar unemployment on Thursday morning. That could have some, my best guess would be a shorter term impact. Nothing too intense that won't get corrected likely as as the days go on, but nothing too terribly important to watch. So trades more or less should be okay. And other than that, I think that, again, main ideas, just keep an eye on the US dollar. We should see continued weakness after some type of corrective bounce in wave 4. Again, I'm just assuming or predicting triangle for now, just given that alternation rule, but we could get any kind of corrective pattern, and then one more push down for the more medium term correction. So it should be a fairly calm trading week next week. We'll keep an eye on a few of these pairs here. But other than that, that's all from me, and we'll see you next time.